All right, good morning, guys. We are looking at the chef here, and this is a weekly chart. This is a weekly chart, and for weekly charts, all we want to like simply look at or see it's um we want to look at the last 18 months to know our long-term trading bias. So if we've been going down a slope, or if we've been ranging, or if we've been you know going up like an uptrend. And from this, we've been we ranged last, we trended actually last year, and then from last 2 years to last year, it was a large range before we now traded down into coming into this year, and then we can see some form of consolidation by this July here. That's July 2025. Then coming into 2026, we see this drop here, and then a run up, and then we are seeing a run down now. So this is the weekly chart. Let me open it up so we can see clearly. This is the weekly chart here. I like to start my analysis from the weekly chart because it kind of defines what the week is going to do, or what the week is already doing. So we can see this rundown here, forming a swing low, another swing low here, another swing low here. I like to use the crosshair. Let me change it to cursor so that we'll be able to follow my navigation. So there, you can see here there's a swing low here, stabbing through all of this liquidity here. There's some form of liquidity here. Just take note of that. These old lows here, they are all liquidity. Yeah, we are going to find stops there. So here there's a stop here, leaving this long imbalance, or what some people refer to it as a fair value gap. So we left this large imbalance here to be filled later. We can see how the market comes into it here. Here, watch this candle here, this candle here, this up close candle here. It comes right at the consequent encroachment, which is the mid part of the fair value gap. The next candle opens, trades right to where the imbalance started, then comes down, slams down. The next candle opens, comes down, goes up. Take note of this. This candle here, this weakless candle. Most of the time, it comes back to always put a week on that. So you have to take note of that in doing your analysis. Down to a 1 hour time frame. It can happen down to a 1 hour time frame. So whenever you are analyzing charts or you're looking at the market, know that weakless candles, most of the time, the market comes to put a week on it. This is kind of advanced, but it's here, so I'm just stating it now. So yeah, we see that Mike it comes, puts a week on that, then reverses all the way. Here is we can here is this candle here is the bullish order block that sent the market higher. So let's note that. Let's simply note that. Um, so for bullish order blocks, we use plus. Plus is like up. So bullish order block. You can also maybe use an hyphen so that you can make it known to yourself maybe when you're looking at it on a lower time frame, you know that okay, this is like a weekly order block, and weekly order blocks they tend to be respected so much, or at least have a reaction to it when the market gets there. 80% of the time, it can only go through it if the market is very, maybe let me say, assuming we are bearish. If the market is very bearish, it can only go through it if there is, let me say, a monthly or a 3 week um, point at which it's trying to get to. Do you understand? Or a move from a higher time frame that's above the weekly that it's trying to fulfill. So that's it. So yeah, we have a weekly order block here. Let me extend it so where the writing is going to go a little bit of, yeah. So that's the weekly. Let's lock it. That's the weekly order block, and we are headed right to it. As you can see, the market has traded lower and it's coming right to it. Hmm? So yeah, this is the weekly. This is what we have on the weekly. Sell stops, sell side liquidity run here. Sell side liquidity run there, middle, center, bottom. Let's make it bolder. Yeah, yeah. Sell side liquidity run here. We come back up. We come back up. Put a week on this candle. But did we trade above this swing high? Let's see if we traded above that swing high. I think we did. Let's just see. Did we trade above that swing high? Yeah. Oh, we did. We did. But we didn't do by much, just by a little. But then that little is all you need most of the time to know if we are going to keep going up. Yeah, here is the order block from a weekly time frame. So we'll go down to a daily now. We'll go down to a daily now to see what we have. Yeah, so here is the daily charts. Here's the daily chart. Here is the order block from the weekly chart. As you can see, here is here is a bullish engulfing candle. So we can say this. Let me change this. Like you can say this here. This here is the daily order block. Hmm? Actually, this is a proportion block. Here is the daily order block. That's send the market higher. It hits that weekly imbalance. Let me note that so that we will know. So this let me say this imbalance weekly chart. So we hit that weekly imbalance, right? Yeah, can make it bigger. So let's see, put it in the middle. Then put it in the middle. Yeah, in the center. So now we know that this is the imbalance from the weekly chart, which we feel just going slightly above. We went above, and if you look here, you see that. If you look here, you see that. With the cross. If you look here, you see that there's a little bit of space left from this imbalance here. Can also be called I think the ICT concept. He calls it CB. That's sell side imbalance, buy side inefficiency. So CB. Yeah. So take note of that. It's called a CB. So there's a little space left here on the CB. This run up here. This run up here is it's an order block, a bearish order block. So we poke just a little above it, taking all the stops that are here. Everyone that has traded their stop, they have moved their stop here, traded their stop here, has been knocked out with this poke up here. And then we started coming down here. Watch, watch um this fair value gap here. This is on the daily chart. So reactions would be so uh will be so strong on the weekly and on the daily and also the 4 hour. So this will make this another color, so we'll be able to flesh that out when we're uh, looking at our grades. So let's make this blue. Let's make this blue. That's nice. So you can. This is an institutional uh, order flow drill. So it comes, pokes into it just a little bit and traces down. Comes up one more time, touches it. You can see here. All this is happening inside that rebalance, but it has rebalanced the imbalance from the weekly. Now comes down. That run down forms another imbalance on the daily. Then it goes up into that imbalance. It goes up to this. It goes up one more time into the imbalance, then trades off. So now here is that weekly order block we pointed out there. Now we have something else. We have an imbalance here from the daily. You can see there's an imbalance here from the daily. I'll not mark that out because if I should mark that out, it would if I mark that on the daily, you'll be surprised that the mean the or the consequent encroachment, which is the middle of the let me just do it. The middle of the imbalance is going to it, it most likely will correspond with the other block. For elements. It's most likely going to correspond with the other block. Let's just see it. Can you see? So it lands directly on where we marked our other block. So we are expecting a reaction from this main threshold or the consequent encroachment of this fair value gap already, or we are expecting it to trade all through to the open of this down candle here, which is the daily order block. So that's what we have on the daily chart. So let's let's go to the 4 hour chart and see what we have. Yeah, on the 4 hour, this series of down candles here, the series of down candles here is the order block from the daily chart. This series of down candles here, yeah, is order block from the daily chart. All the series of candles here, this consolidation up to here is the order block from the weekly chart. So price is fractal, so it tends to keep breaking down until it gets to a 1 second chart. Do you understand? So what do we have there? On the 4 hour, we have here is that run. It comes and touches here. You see the reaction here. It comes, touches it, it goes up, comes down, touches it again, then it goes right up. What was this? We didn't put the name on that. Okay, that's the CB. That's the CB from the daily chart. So it touches the CB. Yes, CB daily. CB daily. So yeah, touches the CB daily chart and then it comes down. So CB daily, yeah. CB daily. Right. so we can see. Okay. So yeah, that's CB daily. So we're going to let's go to the 4 hour again so we understand. So it comes runs into the daily CB, just a little bit into it, and then trades off. Like I said, daily charts they tend to market tend to respect it very well. Let's take off this Monday Tuesday that we have do here. So it tends to respect it very well, very well. 80% of the time. Here you can also see a reaction here, and then it goes up, and then this time it's coming down. So we'll see in the coming hours or minutes the reaction we'll get here. There's a low here, there's a low here, there's a low here. There are series of lows here, and so far so good. It has taken here. It took most of it out here, and then this rundown is looking like it's going to come into this, into here, into here most likely. Here the 25% from the 50% from this middle line here and down here, or down here. So those are the areas we expect it to reach into. Let's go up to a weekly, a month, a daily chart one more time. So from the daily chart here, you see this last down close candle. We also want to mark it out. That is a daily order block. It's very, you can see the high of the order block it's like it's together. It's like that's where the fair value gap starts here. So we want to just take note of the open. So let's mark out the open. Yeah. So that is the open of the fair value gap. So we want to see a reaction from here, or 25% of this fair value gap here, or the order block on the daily. So but now this, yeah, let's mark this fair value gap to the chart. Right. Center 20, 14, 14. Yeah. Um, so yeah, so you can clearly see this bullish order block. So bullish order block is plus and OB. So you take note of that. Bullish order block. So, and yeah, so that's what we have on our higher time frame. Now let's go down to a 1 hour chart. A 1 hour chart. 1 hour charts are where we look at runs on liquidity. 1 hour charts are the chart where we look at runs on liquidity to see where our liquidity are and our run on liquidity. So we see this last run here, last run up here, last run up here, some form of consolidation, hits, bounces, then comes down into this fair value gap from the daily chart. Fair value gap from the daily chart. Let's go to this is the 1 hour. Well, did we see any imbalance on the 1 hour? There seem to be a series of down close candles. Yeah. So we keep watching till when we get to the 15 minutes and when we get to the